This is Alan Palmer here from NASDOG.com. Over in the offices of MrTopstep.com. Send out a special thanks to Danny Riley. What we're going to do is we're going to address two markets here that have given me multi-year buy signals, okay? And this is the NASDOG olive line, the number that hurts the most amount of traders. Remember that going forward. What we're going to do here is we're going to look at some long-term charts, okay? The first chart, hopefully, is soybeans, okay? Now this is in the May contract. And so what we're doing is we're looking around here. This is the level in the May beans, okay? Because I do each analysis independent, okay? This is why traders have such a hard time. This is May beans, and what we're talking about here down here is a level of 940. What you do when you're looking at my charts is you look at these olive lines. You buy them at the olive lines, you keep a tight stop, okay? We just came down now in the May contract, so we have November, January, March, May, so we're the fourth contract out, okay? So it's not as exact, but these are areas. The front month, November, just went down, and I've been publishing it on my website, NASDOG.com. The number is 908. Last week we got down to 908. We had some noise. We had some predatory programs in the overnight trade on 2 occasions that are going gunning for stops. You have to ignore that noise here, okay? And you have to trade a little bit more with a macroeconomic. Now what we had here is we have the index funds that are just still massive long. I think in the meal alone, in the soybean meal alone, I think they have 77,000 contracts times $100 times $77,000. That's every dollar down in meal, and we just broke about 40 bucks, okay? So what we're doing is we're coming here, and this whole chart here, okay, is the history of the bean contract, okay? These numbers up here, when my olive line is wrong, we go up to these target numbers. We hit it once, we hit it twice. Now this is on the May contract, okay? This is a deferred contract. This works. I'm going to show you it in another time. So, okay, so what we want to do here is we're looking to buy beans, okay? Last week, we're filled, okay? We have a tight stop underneath there because we can go to other levels down depending on how hard they're going to hit the market. And I'm not ruling out a year-end sell-off because anybody that's been in commodities rolling it through their Goldman Sachs roll, they're down big money. And I think this is the year that they're going to finally look at it and say, why am I even in commodities? Okay, and we have worldwide gluts in everything, in a lot of things. Okay, not coffee. Okay, the second chart, what we're going to do is we're going to look at gold, okay? Gold, we all know there's no inflation anywhere. I'm looking for a pickup in inflation. People are looking for 0 inflation, 1.8. You could pick the number, okay? Now gold, this chart is from a couple weeks ago, okay? Doesn't matter, okay, because when you get NASDOG charts, these charts are good for a month, okay? So what we're doing is we're looking down here at these levels here. Right here we have 1205.80. I can't see that chart here, but we come in a couple different olive lines. I have 3 of them here. We usually only get them 2 in sequence, okay? You can see we took out this trend line here. So now we have everybody down here, and this market held. We went down to 1206 first time, bounced a percent and a half. We went down to 1205, bounced a percent. Okay, that has me really, and you have to trade around this. If you get stopped out, you put a stop back in above your number, okay? So yesterday we got back above. We dipped down to this level here. I have a couple different trend lines here, okay? And they're a little dated. It doesn't matter. The theme is the same. We're thinking macro, okay? We're looking to pick a bottom here in gold. Maybe you do it through the platinum market because now it seems like there's only $50, $60 in premium. That's up to the research on your own. Okay, so what we have, these are nice charts, aren't they? Very color-coded, giving you bearish signals, and then all of a sudden we do the bottlenecks. These were targets from up here. Okay, so then these targets, then we take out the trend line and we come down to the olive lines and we hold. We break through, that's why you have a couple dollar stop max. Max, you can have it ticks. Okay, if you have the right calculations and you're in the right month. Everything is different. Everything has its own individual relationship because that's how, because in the age of electronic trading, what everybody does is they cram in spreads and they push them to extremes, okay? Targets are extremes. When we go fast, like my olive line, those are extremes. Everybody's bearish. Chalk me up as a bull in both. This is Alan Palmer, NASDOG.com. Thank you, Danny Riley. Coming to you from MrTopStep.com. Signing off.